Hello, and welcome to the Road to Autonomy Podcast. I am your host, Grayson Brulte. The Road to Autonomy Podcast is brought to you in part by Florida Internet and Television. It's time to cut the tax on tech. Hello, and welcome to the Road to Autonomy. I am your host, Grayson Brulte. On today's episode, we're absolutely honored to have David Welch, Detroit Bureau Chief, Bloomberg. Welcome to the podcast, David.
Thanks for having me. Good to be here.
Super excited. We talk all the time, so I'm happy to have this in a public forum that we can share with others today.
Absolutely. And we can make fun of autonomous vehicle companies and everything else. There's all kinds of news.
That's a fair thing that we're going to have a great time. I want to start on finance first. David, what are your current thoughts on the state of the SPAC market as it directly relates to mobility and electric vehicle SPACs?
Now, I thought that when the whole story with Nikola blew up, and then you had a second short seller targeting Lordstown Motors with one of these kinds of reports, that it would put the brakes on things and really get both investors and companies who might take SPAC money to pause for a second. And there might be a little of that, but I'm still hearing about a lot of SPACs that are going to come to market in the next 6 months anyways, and that there's still a lot of deal volume going on out there. So I'm not sure we've hit the peak. I think there's still some legs to this thing.
The media is covering it. Jim Cramer on Mad Money called EV SPACs electric hype machines. Is he right?
Yeah. Well, are they raising the hype, or is it the investors themselves who are doing it? I mean, the SPACs they're getting a lot of money, right? And they're getting the money before they even have a deal. So there's an appetite out there, and it's not totally rational because they don't know what they're buying. They're relying on, to me, this is, that the flaw in that system is they're relying on somebody to do proper due diligence. Most of the SPACs are run by finance guys. There are some exceptions out there. Steve Girsky was vice chairman of General Motors. So VectoIQ, Steve knows the business, and he had access to people, some retired GM guys, to do tech due diligence and so forth. The other one is QELL, is run by, what's his name, Barry Engel, who's the former president of GM, just left the company 6 months ago. So, some of them are run by actual industry executives who know technology, know the markets, and that sort of thing. But there are a lot of them that are there's one run by a couple of real estate guys. That's not to say they won't do good due diligence, because they can hire people to do it. But do they really know the business, and will they get the best people? I'm not saying they don't, but if I'm an investor, those are questions I need to be asking. Who is doing the scouting of these companies that I'm going to be invested in once they go ahead and buy? And it just doesn't seem to be the kind of rigorous look over that you get from the market during an IPO and a roadshow, right? You're not having all these investor groups really sit down with the CEO of the company they're going to end up owning and asking them all kinds of questions and getting presentations and that sort of thing. Now, I mean, in a way, there's a check and balance there, because usually with SPACs, you're getting a treasury bill return, and then you can cash out and not participate if you want to. I haven't seen that happen very much. And maybe that's where Kramer's talking about the hype is kicking in. I'll tell you one thing that the SPACs are doing that is kind of hype related is they're creating a market for these companies that heretofore would have been begging venture cap companies, their friends, and other angels to come in and give them some seed capital or second and third rounds. We talk about Bollinger. So Bollinger was in the middle of doing his second round. The first was his own money. The guy made money in organic hair care products. And the second round is, basically $50 million from whoever will invest, and then they will quickly make that second round part of a bigger $250 million round. But a SPAC could drop that money and much more in their lap if he's willing to take it. But then look, you're a public company, and you have to start adding staff for all these quarterly earnings reports and regulatory issues that you have to deal with. And you got to start showing results. And you're going to have some short seller potentially make a run at you. So it gets complicated very quickly.
There's a lot to unpack there. You talk about delivering quarter results, one of the most important things you can do as a publicly traded company. You talked about due diligence, and you talked about the traditional IPO. So I want to start with due diligence as we unpack this. What the heck did VectoIQ not see in Nikola? This report came out. The gentleman did not have, or his team did not actually have access to the vehicles to do due diligence. And you can use the word internet sleuth or any word you want to use, but they obviously found something there. How, when VectoIQ did that, did they not uncover this? And then furthermore, what did GM not see in this due diligence? What did they miss?
So look, I know both GM after VectoIQ bought it and Vecto itself. I know they did real due diligence. Steve Girsky and I were on a podcast. We were on Autoline about 6 or 8 weeks ago, and Steve said he has driven in the fuel cell trucks, and he did have, I know at least 2 former GM guys who he hired. And GM has a very good fuel cell program. They've been working on that for almost 20 years. So he had a couple of their guys, retired guys, looking at this stuff. And, there weren't any real illusions, I don't think, from either Vecto or General Motors that there was a great technology here that was being uncovered. This part right here is very important. This is where it gets sticky. If you talk to Girsky, if you talk to Mark Russell, who's the president of Nikola, they will tell you that the company is an integrator, and that if you go through the financial statements, they were always going to use pre-GM deal Bosch's fuel cell system in a truck made by Iveco, which is owned by Case New Holland, and they had some of the connective tissue, right, some computer electronics and that sort of thing. But the magic they were bringing was that no one else was planning on doing class 7 and 8 highway freight trucks, and they wanted to do it. And they want to build out the hydrogen infrastructure. So basically what they bring is a vision and now the ability to raise capital and do it. And they didn't really have technology. The problem is that Trevor Milton, the now deposed chairman of the company and founder, was out there saying they had the best fuel cell system there is, when it wasn't really their system, which left them open to the short seller criticism that they got and a deep six the stock. I think, look, what GM, now Milton has a lot of other accusations against him related to sexual harassment and so forth. So there's just been a lot of, in his past, business dealings and personal dealings that have made him a character that people don't want running this company, and he's had to leave the company. That's the part that they missed. And some of the stuff, his cousin came out and accused him of things after the fact. That was not discoverable. I mean, it's not like there was a police report someplace that nobody found. But there was a lot that was. I mean, if you went back and looked at some of the investor presentations, there was a lot of braggadocio there. Now, why would GM and Vecto do this? They sort of looked at this and they said, we know this company doesn't have some brand new fuel cell system that's turnkey and ready to go, and that we're going to have to help them integrate it and make it happen. So what Trevor Milton said about this thing back in 2016, we don't really care. They have the ability to raise capital because they have this hot stock. They got a vision that we buy into, and we can bring them the technology and the industrial resources to get it on the road. So we don't care. Now, everybody's kind of gotten a bit of a black eye over this because it has imploded, and they still haven't closed the deal with GM yet. They have till December 3rd to do so. So clearly GM's taking another look at this thing and probably asking for some better terms. Particularly, look, if for no other reason, the stock is far lower than it was when they announced the deal, so they may want protection so that they still have an 11% stake, particularly as the company raises more money in the future. But yeah, it's all very touch and go right now, I think. And I think they missed what a risk Trevor Milton himself was.
I think that's a very fair assessment, and that's a good breakdown. And I want to ask you this question. Would Nikola have even made it through a traditional IPO process?
I don't think a lot of these companies would, because they don't have revenue. Now, we've seen companies without revenue, or if they had revenue without profit, actually go public. I don't think they get through an IPO process because they don't have a killer app either. I think without the SPAC process, I think Nikola would have been, and they did raise some real money, by the way. Trevor Milton did raise a lot of money on his own before Vecto came around, but he'd still be out there raising money to get their integrated fuel cell truck with a Bosch system to the next level, to the next level, to the next level. and he'd be out there still trying to find partners. Does GM do that deal if there isn't a hot stock? That's a big question. I don't think they would have. I think what attracted GM was GM does want to get into the trucking business, commercial trucks, with either electrics or fuel cells. But if they can find someone else to put the investment money to build the fuel cell trucks and the hydrogen fueling infrastructure, that's great. That's money they don't have to spend. And we have a template already for that with Cruise. They're self-driving in it. They got Honda, SoftBank, and T. Rowe Price to put up $6.1 billion to help them fund it. GM's still the primary owner, but they've defrayed the development cost by bringing investors along. And I think this is another version of that. So no, I don't think a lot of these companies go public without the SPAC process, essentially doing an end run around that whole complicated roadshow. I don't think they can make it.
I think you're right about that. And to me, as an investor in the public markets, the thing I like about the roadshow is that it forces the founders and the executive teams to hone in on their story. And when they're asked very hard questions, they have to hone in on their story. And it's basically going through a boot camp to go through what it is kind of to be a public company, which I believe is very, very important. And on the other hand, what if Robinhood did not exist? We didn't have a pandemic and a lockdown and all that money flowing into these retail accounts of trading, and Nikola's stock did not zoom up the way it did. Would we be having this conversation?
Probably not. That's a big part of this phenomenon. There was a point, and if we looked it up now, we'd probably find similar numbers. When I looked at the top stocks owned by Robinhood accounts, they don't tell you how many shares and that sort of thing, but the number of account holders invested in certain stocks. And at various points, 4 or 5 of these EV or auto tech SPACs were in the top 20. Tesla's always there too, by the way. But yeah, the retail investors were snapping this stuff up. And are they real? And are they long-term investors? Probably not. I think they're trying to make quick bucks off of the quick movements on these things. But no, I think we may be having this conversation, let me put it that way, but probably with fewer companies and probably with less volatile stocks that have much smaller premiums. I just think it would be a less volatile and less crazed market, if you will.
When you look at a crazed market, you have to think of SoftBank because they completely destroyed the big venture capital thing with the Vision Fund. And then they've announced they're going into the SPAC game.
Yeah. Well, and then look, one of these SPACs is, which one is it? Apollo has a SPAC, right? So real money's getting into the game. To me, that's a good sign because those guys are professionals who've invested in everything from publicly traded stocks already to startups and other private players. And they've made a lot of money, so it's more clear that they know how to do due diligence. So I think that's a better bet than some of these more unknown SPACs that are out there.
And then with the due diligence in the private market, BlackRock is throwing around some serious change. They've invested in Rivian twice. They just have invested in Arrival. That's getting interesting because I'm assuming that BlackRock's going to do massive due diligence before making an investment.
Arrival's an interesting company. The North American CEO is Mike Abelson. He used to be the chief strategy officer for General Motors. And there's another executive who used to be with GM, helped them buy Cruise a while back. So there's pretty good name people running that company. And Rivian is backed by Amazon, which can will this into existence. So, those are a couple of good bets. So if that's just one example, maybe you're starting to see the blue chip investment companies put their money in the less risky startups. And I'd say Rivian is probably less risky. I mean, you've got, it started with Saudi money. Now it's got Amazon money. It's got Ford money. And they've got a factory already and vehicles. There's some real momentum behind that. So when you see a firm like that backing it, then, part of their diligence is just following a lot of industrial investment that's already in the company.
When I look at Rivian, I like the design of the SUV. I think it's a really great niche play, but I see all the big revenue to return their valuation coming from the commercial business. Does Amazon just step up one day and just write a pretty outsized check and acquire them and put this technology across their entire fleet?
I don't know that they need to. They could, but if you're Amazon, why do you want to own a bunch of hard assets like that? They already own warehouses and that sort of thing. I mean, look, if anything, I could see a business model where Rivian owns the truck and leases them to Amazon. And then at a certain point in the life cycle, they take them back and do something else with them. I'm not saying they're going to do that, but these Silicon Valley companies, the .coms, they tend to want to be asset light. Now, Amazon is an exception because they have foods, they have a bunch of warehouses all over the place. They're actually a logistics company as well, with a lot of their own vehicles. And look, they want to. One of the things I think Rivian's going to do is make electric vehicles that buzz around the warehouses themselves to haul stuff around inside. They could buy this. I mean, this would be my guess. If they think that Rivian stock at some point would be as hot as Tesla's, then yeah, why not buy it and make a bunch of money off of that at some point? But if it's just going to be another bunch of hard assets with low margins, they probably wouldn't want to weigh down their balance sheet with it.
But they bought Zoox.
They did,
and there's going to be hard assets there whenever they come around to revealing it to the public.
That's a good question. Will there be? Because Zoox, it basically makes software and autonomous systems. And they want to make vehicles, but now that they're owned by Amazon, do they need to make vehicles? Or at least partly owned by Amazon.
The interesting thing in Zoox is you look at what they've built. They do have a prototype vehicle in Foster City. And I'm going to go out on a limb here and say, is there a deal where Rivian and their factories, Amazon negotiates the deal where the Zoox vehicle are made at Rivian factories? They're retooled to make this for an additional investment. That becomes interesting. But when I look at Amazon as it relates to mobility, there's two things. One, I've been told that this personally comes from Bezos, that you were to focus only on passenger. You were not to focus on delivery, which I find surprising. And then two, what happens if they do follow through in the vision of launching this robotaxi and then they bundle it in with Prime? So you have the traditional $119 Prime that majority of individuals use, but then say for $299 or $399, you've got a mobility Prime. That becomes interesting. A flat rate for all your mobility around cities?
Yeah, there are a lot of ways they can go with this. And in a sense, what I'm starting to see with Amazon buying into Zoox, buying into Rivian is they're starting to look like SoftBank. If you really look at SoftBank's mobility portfolio, in addition to Cruise, they've got a bunch of other companies that do ride sharing. They have goods delivery, food delivery. They've got some stuff that's sort of, in the background, technology for autonomous vehicles. There's quite a bit that they do. They don't necessarily connect them, but they can. And that's the same thing that Amazon could do. And I bet they will at some point. But yeah, for Amazon, I mean, they want to sell you everything. So they could have an Amazon. I mean, look, they've got eyeballs. They could have their own competitor to Uber and Lyft with Zoox controlled self-driving vehicles, right? But look, as long as you and I have been talking about autonomy, it's always been an open question as to who's going to own the cars and the fleet and manage it. And really, nobody wants to, because that's the capital intensive, big chunk of weight on your balance sheet and low margin side of the business. Does Amazon want to do that? I mean, maybe, but I don't know. They do have the money to be able to do that.
Or does a Penske do it? They do it now with trucks and they lease them out. Do they step in and diversify their business?
Yeah, Penske's interesting. They are a company that could actually own some of these vehicles and manage them. The other one is Hertz is in bankruptcy, but they own this fleet management business called Donlen. Could Donlen manage fleets for people? Hertz itself already manages cars for Uber and Lyft, so they could do it. So all of these companies that have lots, they basically have real estate where cars can sit when they're not being run. They have people who actually manage them, and they have the knowledge to manage a fleet. Any one of them can do this stuff, and they will make money doing that. I mean, there is a good business there. It's not the sexy one that everyone thinks will have super high margins that everyone's investing in right now, but it's an extremely necessary piece of that ecosystem. And that the fewer people who want to do it, the more money will be made in that part of it.
And Penske has experience now. They're doing it with autonomous trucking. They're buying the vehicles and leasing them out for these developers to build on them. And then Penske also has a huge maintenance business that they've announced for trucks. They're doing one for autonomous trucking now, where if the truck breaks down on the side of the road, Penske maintenance comes in and takes care of all that problem for you. So they're outsourcing that. They've got some really interesting telematics stuff to monitor the vehicle. So if you're monitoring the the truck today, an autonomous truck, to monitoring a vehicle, to me, it doesn't seem like it's a very big leap since they already have the infrastructure in place.
Yeah, are they working with Too Simple?
They are working with Too Simple, yes.
Yeah, and I think UPS as well. That's a pretty powerful triumvirate right there. And there's a lot of knowledge, and there's a way to actually monetize that business. I mean, you and I have been wondering for the longest time how autonomy is going to be monetized, given some of the numbers that were thrown out there. And if you've got Penske managing vehicles with Too Simple software delivering UPS packages, that's a potentially powerful combination.
Too Simple's done it right, where they focused on partnerships. And we focus on what we do best is building the Chuck Price and the team are building the software to drive the trucks. And then on the other hand, then you have all the partners for all the other pieces. And you and I have talked a lot about different business models. We're in the midst of what I've called the great pivot from vehicles to trucks, because trucks have a path to profitability. Well, robo-taxis, I believe that's going to go to the race to zero. Who can do the cheapest ride? What are your thoughts on general in autonomous trucking?
On who can do it the best, or just how quickly it develops?
How quickly it develops, and where do you think that the routes will be? Do you think it's going to be from the, say, Arizona to Jacksonville runs, Arizona to Texas runs?
Not sure where, but I think you could see something starting off like LA to Phoenix. That makes a lot of sense to me because it's highway. It's not that far. It's easily navigated because it's just not a heavily. Once you get outside of Southern California, it's a lot of open desert for people to drive, or for robots to drive across. So I think you'll see it that way. To me, like last mile's a little tougher because that calls for really navigating traffic, and you still need humans on board those trucks to unload, depending on the size of the truck. To me, that's where the business model gets more sticky because you're going to need somebody on there to do it.
Because Too Simple strategy is from hub to hub, where Embark's and Kodiak's strategy is just to run autonomous on the highway, and then when you're going on the off-ramp, have a driver take over and then take you the last thing, where Too Simple's going the whole way. If Too Simple can perfect it where they can go hub to hub with no driver, that just think about from the economic standpoint of that becomes really interesting. So when you get to the warehouse at the hub, there's already individuals there to take the cargo off. So you don't have to have that extra labor cost to go from the highway to the hub.
Well, that is, yeah. And so it makes you wonder, like, when is Walmart going to really get into this? Because they've got these big DCs going to big stores. That's where it's really compelling for them. Same with Amazon, really, with their big distribution centers. The tricky part for Amazon is going from distribution to a house. You need somebody to walk the package up the porch. But, for these longer highway routes, for the reason you're mentioning it does make some sense there because it's just easy highway. Where I'm getting at is the only part that gets sticky for me is once you get into suburban Phoenix and you have to start navigating streets with these big trucks, that's just where I think it's just trickier driving. And it's not totally clear that autonomy has solved that.
That's a fair point. I think at some point we'll get there. And as you mentioned, Walmart's working with Gatic AI for the middle mile, and they're testing that down in Arkansas. So that's becoming really interesting, moving them from the warehouses to the stores. And so Walmart's heavily, fully invested in autonomy, and there'll be big stuff coming from them in the future.
I'm sure there will. I mean, their whole logistics system's kind of tailor-made for it.
And when you look at systems that are tailor-made, everybody says Waymo. Waymo has the robotaxi business that they're operating in Chandler in the Phoenix metro region. Then they have Waymo Via with trucking. Did Waymo decide to go forward with the trucks to try and generate some sort of revenue where the robotaxis will not have a significant impact on revenue for quite a long time?
Yeah, I think so. I mean, everyone's kind of seen that robotaxis bit of a ways out, and also in the early days you might be able to get pricing because there might only be Waymo in Phoenix and Cruise in San Francisco, but over time, once you have more players out there with robotaxis, that drives the price down because you have to start to compete, and you have these extremely expensive vehicles and all the fleet management costs and everything else, and it's tougher to make money. And you're starting to see Cruise also pivot toward goods delivery. They were delivering food to food banks during COVID in San Francisco very small pilot, but it shows you where they're starting to think. And I think, Waymo is as well, right? I mean, they're starting to really look at goods delivery too. It is interesting that they are still sticking to their guns on robotaxi because, we just saw that they're going to launch that service in Phoenix without a safety driver in there, and I think open it up to a little bit wider audience. So they're still really pushing that, which is interesting to me, and I know why they are, because they still see a great market for it and they want to be first. But I don't know, would they be better off pivoting to goods delivery, freight, learning a lot more?
At some point, they're going to have to, because even though they have $2.5 billion of outside capital, investors in the public market are going to demand revenue. And with this DOJ investigation, the rumors around DC of a Google breakup, you're going to have to start showing revenue, because how much longer can Alphabet continue to fund it? And then the big question is, what happens when Ruth Port retires and you have a new CFO at Alphabet? Will they continue to let it go? Or if Sundar decides to say, okay, we need to, we're going through this DOJ investigation, we have to put resources other places. To me, there's just so many outsized factors, and it all leads to one road: revenue.
Right. And they have to start generating it at some point, because they've been working on this for 10 years and they've built up a lot of hype over it. I mean, look, Google or Alphabet, Amazon, these are companies that have proven that you can go a long while without making a lot of money, and people will wait on you. And I think in the case of autonomy, they can absorb the development costs. But I think they're going to want to see a light at the end of the tunnel in terms of monetization of these things. I still think shipping is the faster way to do that. I still think that their ultimate goal, and you sort of flicked at this earlier, is still robotaxi, because they have all these eyeballs and there's just sheer volume of people who would use these services. If you're an Amazon Prime customer and you've got this Zeus-powered vehicle and you've got a subscription for how many rides you can get, it's just another thing they can sell you. And then while you're in this autonomous vehicle, they get you to buy other stuff and market to you. It's just this marketing loop that feeds off itself as they keep doing it. But I still think, nearer term, freight's the way to go in terms of really generating revenue.
So if I'm John Krafcik, I'm the CEO of Waymo, I am doubling and tripling down on freight to generate revenue. I talk to Ruth and say, okay, Ruth, what is a number, a financial target that we can hit? Hit that number, make it public, start showing that Waymo is generating revenue while we continue to grow the robo-taxi business, because all that location data that those taxis are going to generate, you're right, will become very interesting. Google will monetize it somehow, but I want to come out and start generating money from freight to show that, listen, we can generate money. This is no longer a moonshot. We've already graduated from Google X, and now we're becoming a business that's generating revenue. One, I think that benefits the Waymo program as a whole, and I also think it moves the stock in an upward trajectory.
I think that all sounds pretty good, and I think there's also a lot of freight data that will be very interesting to them that they'll be able to mine. I mean, they probably already have a lot of, well, we know they have really great logistics data, stuff that gets shipped. I mean, they just, Google tracks everything. But the sheer amount of money that they could make if they get there first, and they probably will, is pretty compelling. I mean, Krafcik can go and pitch that they can really be the pioneer in this thing. And, go back to what Dan Ammon said in a piece I did a year ago. He thinks there will be, just like you have Android and Apple iOS, there will be a couple, 3 autonomous stacks or systems. And in every market, you might have a couple of players doing robotaxi. So if you're the first one there in certain markets with freight, with autonomous freight, it's a wide open business with no competition, and it can really grow. So that's a pitch Krafcik can make, and they can really get revenue out of that. And a lot of players big and small will want to try that out.
While he could make the pitch, I've heard from my engineering and technical relationships that the Waymo is having a very hard time porting the Waymo driver from suburban Chandler to highways. I'm hearing that they're having a lot of issues around the perception system. The tech is really not nearly as far along for highway driving as they're presenting?
That's a big question that I have. And I'd say the same for Cruise and maybe even Zoox. You haven't really seen, and they may just not have shown it to us yet, but we haven't really seen any of those players who have focused on robotaxi, on carrying people movers. We haven't seen them really pilot actual trucking or freight vehicles in a real way. So is it really difficult to switch from very low speeds, stop and go traffic in a place like San Francisco, or suburban driving in the case of Waymo, to highway and a truck? Driving a semi is a totally different deal than a four-wheeled car in passenger vehicle. I don't know the answer. I suspect it is very different and very difficult. I mean, you and I can't just hop in a rig and drive it.
No. That'd be fun to try on a track with you, though.
So the software has to change a lot. And it sounds like it shouldn't be that difficult to do, but I bet it is. And that's got to be one reason why we haven't seen any of them do it yet, even though it's becoming clear that there's a real business case they should be chasing.
On a previous podcast, I had Chuck Price on, who was the chief product officer for Too Simple. And he was talking about, we talked about the theory of the universal driver. He goes, there's no such thing. He goes, the truck's vibrating and it's bouncing. And he said, you have to look at perception. They're looking 1,000 meters down the road. There's all these nuances with the trailer hitch and all this stuff. And he did a really good technical job breaking it down. So while Too Simple focused on trucking from day one, Embark focused on trucking from day one, Kodiak focused on trucking from day one, and those are the big three, in my opinion, for pure autonomous trucking startups. Do the three of those startups have a clear advantage over, say, the Waymos that are entering this, and then the Auroras that are in the middle of I've lost track how many pivots it is now going into trucking, since they focus from day one purely on trucking?
I don't know if they have an advantage because they have less money and fewer resources. However, they have a head start, and they have more experience in that area of working with bigger vehicles on different routes that are going to be more catered toward that. So, I mean, look, they have an advantage at the moment. That can change very quickly just because, there's a lot of talent at Waymo and Cruise and Aurora as well. I think Aurora has been doing some work in this area, but and probably Argo has, because Ford has said that they want to get into electric delivery vehicles. So you'd think there's some work being done. And remember, they don't tell us everything they're working on. But we know that some of the trucking-related autonomous companies are working specifically on solving that problem. And look, one thing we found out in the past 18 months is that even when companies are working on a very specific problem, and it looks like they've got a fix on it, they don't. And they find more edge cases, and they find more business case problems, and they end up taking a step back. Look at the news from Cruise this week. They told us a year ago, December, that they were going to be having, they were going to be launching a service. And then when they showed us the origin early in the year, they told us that they were working with California state authorities and kind of hinted that they might be having the service may come out soon. So here we are in October, and they're just getting a permit to run 5 test vehicles without a driver in it. So it's clearly moving more slowly than everybody said in the area where they have expertise and where they've been telling us all along they're going to deploy. So if they're going to switch tracks and go to freight, I think you're going to see a similar kind of delay for them to be able to get there.
You're totally right about the delay. And you mentioned with Dan Amon and package delivery during the pandemic. Do you think Cruise at some point starts experimenting with trucks at one of GM's many research facilities around the country?
Yeah, I think they can and will. Because look, Honda's the other partner there, and GM has the better trucks for this sort of thing. And now, look, GM does have an issue here where they have delivery vans and they have pickup trucks. They don't actually have a commercial trucking unit per se. And they've said they want to get into electric delivery or electric commercial trucks. But it's not like they have a big division like Daimler does, where they've got trucks that are ready to go. But that stuff can be converted, and they're going to start working on it. And I think they will. I think Cruise will start working on that. The other thing is, Cruise has not been shy about finding partners that aren't General Motors. You could potentially see them doing that. I thought that if Nikola works out, that you would see Cruise working with Nikola's delivery vehicles to try to make them autonomous at some point. That whole thing is clearly the deal's still not closed, and we also don't know when Nikola will actually have trucks to market, so that would be a ways out. But GM could bring in another partner who makes commercial vans, trucks, buses, whatever. They could work with Navistar and Traton, who are merging out. There are a lot of options they could try to pull.
Or they could even talk to PACCAR. They got the innovation lab in the Valley.
That's true. They actually would work with Traton because that's VW, and they'd probably work with Ford system. But so it was a bad example. But they could work with any of these companies that are out there, not affiliated already.
When you look at companies that, let's say they have a dance partner and the deals, because I believe that you're going to need a manufacturing partner. Do you have any insight to what happened with the Aurora VW deal that was really hyped up and then all suddenly one day it dissolved?
Well, so VW is now working with Ford, and the two companies have a lot of other partnerships, electric vehicles, autonomous vehicles. They're going to be sharing parts. And I think Volkswagen just wanted one partner. And now, if and why they may have said Aurora wasn't the partner is a different issue. But I think if you're going to partner up with Argo, which is essentially Ford, on EVs and AVs, I imagine Ford's going to want some exclusivity. I think that's what happened. And now, the more interesting question on Aurora for me is what happened with Hyundai, because they're now, they now have a new partner, and it looks like the Aurora deal with them is. They haven't really said, but I think it's either minimized or, at a minimum, you have to wonder why Hyundai now has a different partner for autonomy. What's going on with Aurora? It's a fair question.
And the reason I bring up Aurora, because there's a trend. There's a pattern here. This is not like a one-off situation. There's a pattern and a trend, which raises the question of, what is Aurora's business model? Do you have any insight or ideas to what their business model is?
What they told us is that they want to be able to supply almost a turnkey autonomous system for anybody who will use it, and sort of be this agnostic provider of autonomy. I think the problem with that is everybody seems to want their autonomous player to be a true partner with some skin in the game. They don't want to do it for hire. They want to be joined at the hip. So, now you've got GM and Honda joined at the hip with Cruise with equity stakes. Volkswagen and Ford equity stakes in Argo, right? Real skin in the game. And now Hyundai, I think, did take an equity stake in Aurora. So that's what I mean by that's a bigger question. It's more of a mystery. So, why are they running off with another partner on this thing?
So let's fast forward to the future. Let's say Cruise strikes another deal with another investor. Argo strikes another deal. Waymo cuts another deal. Does that mean that the rest of the industry to compete with the big three are going to have to either merge together or fall by the market will just let them fall by the wayside? Because to me is that once this market consolidates, that you're going to have, I would think, I'm going to call them the big three left in the robotaxi business, and you'll have niche businesses like Oliver Cameron's Voyage, which will be running around planned communities. This makes a lot of sense. But overall, it seems that the three of these companies are poised to run away with the market.
Well, yeah, they are, at least at the moment. These things change. These things can change really rapidly. But I think everybody's going to have to find true partners in this thing. No one can really go it alone because it's too expensive. And the expertise is there just aren't enough people out there who know how to write autonomous software and integrate these systems to where you can have 20 different players. And I do think Ammon is right about this, that you will have a limited number of players doing it, both in terms of operating system and software, because at some point you're not going to need 8 of these, right? You're going to need a couple, 3, whatever. And that's just for robotaxi. Maybe you'll need a couple more for trucking and freight. There are different segments, but you're not going to need 8 in each one of those. And you wouldn't anyways, because it's just too expensive to build. Does it become a commodity at some point? That's a long way away when autonomous stacks become a commodity. But at a certain point, it's just, down the road, it will be something that we just expect to work. And it's just not going to be that much more special than another. There are different You can buy different phones out there, but they're really primarily two phone operating systems, right? Two major ones. And there are, two major carriers in Verizon and AT&T. You have T-Mobile and some others who are smaller players, but even there, it's a handful of players. And I think you'll end up seeing the same with autonomous systems. And you're going to have everyone's going to have to partner up to do this. It's just too expensive to develop it.
You're right about that, because if you look at iOS and Android, it's just you pick it because you like either the Android experience better or you like the iOS experience better.
Or your music's all on one and you're stuck with
it. You're locked in the services ecosystem and you can't get out. So as we look to wrap this up, I'd love to ask you about a company that you and I talk a lot about, of Jaguar Land Rover. When does Tata make a move with JLR and put them with an autonomous dance partner to have an autonomous Range Rover?
I mean, they're going to have to move soon, right? Because everybody is partnering up. And these are luxury vehicles, and luxury buyers are going to want, they already do want it. Super Cruise, which is semi-autonomous, is pretty popular option among Cadillac owners. Tesla's Autopilot, also popular among its owners. And let's face it, Tesla, based on price, is basically a luxury car. Doesn't feel like one inside, but the technology certainly is. And these are luxury buyers. So the Jag Land Rover customer is going to want this. So they're going to have to move on autonomy. Now, there will be plenty of partners out there who will do it. They can try to pick who they're going to work with longer term. I think they do have, doesn't the iPace have some kind of semi-autonomous system? I think they do. I'm not sure who developed it, but they definitely need to kind of start moving down that path pretty quickly, because you're going to see the German car companies offering it. Once there's real autonomy out there, I think even people who like to drive, if you want F-Pace, if you're in a 5 Series, you're in any kind of luxury vehicle and you're in a place out on a country road or someplace where you like driving, you will. If you're in bumper-to-bumper traffic, you'd rather zone out and do something else. And if you're paying $80,000, $90,000 for a vehicle, you're going to want capability to do that stuff. So they're going to have to get there, and I think they're going to need a real solid long-term partnership. I think there are plenty of partners out there that'd be willing to work with them. It's more scale for everybody to test once they get involved with it.
Because even today, and I'm happy you brought up Cadillac, and I own a Range Rover. I love to have a version of Super Cruise in my Range Rover for highway driving. It'd be phenomenal. I think there's a larger market than they've really thought about there for those individuals that are buying that vehicle, and they can easily afford to add on, make it a $10,000 option, because there's enough demand for the vehicle and to add that on, and there's enough demand from the consumers to want to use that feature.
Yeah, there is, and look, they've got. Jaguar, or rather, Waymo had picked Jag and the iPace to at least start working with the system. But I don't think there's a true partnership where they're actively developing and integrating everything in the way that GM and Honda are with Cruise, Volkswagen, Ford with Argo, and that sort of thing.
Totally agree with that. I think it's more of a supplier relationship. And David, we've discussed a lot during this conversation. There's a lot for the listeners to digest, think about, and take away. As we look to wrap up this conversation, what would you like our listeners to take away with them about this conversation? Anything that stood out to you that you'd like to emphasize to the listeners?
Yeah, so we touched on a lot of points, right? And the one that's taken up the most of my time in my life lately is the SPAC attack. And so I would tell the listeners, if you're going to invest in one of these, do due diligence on the people who did the due diligence and try to find out what they know. And if they've really got a good read, the companies that they're buying, number one. And look, for autonomy, the thread through everything we were talking about is just, and because autonomy has taken a step back, in terms of deployment, we've seen fewer big announcements on partnerships, just because it's not clear where it's going to go and who's ready to do what. But I think 2021, you got to get past COVID and everything else, where everybody's back and doing business and testing vehicles out on roads and doing things with fewer restrictions. You're going to see this kick up again, where you're going to start to see companies like Jaguar and others really getting into deals with other players to start developing self-driving software in their cars and taking ownership stakes, because it's just too expensive and too risky to develop on your own. And there's just not enough talent for every company out there to have their own individual units doing this.
Well, David, that was great advice, and we really thank you for taking the time. The future's bright, the future's autonomous, and David, thank you again so much for coming on the podcast and having this wonderful conversation.
No problem. Thanks for having me. Always fun to chat.
Thank you for listening to the Road to Autonomy podcast. If you've enjoyed listening, please rate, review, and subscribe on your favorite podcast platform. Want to get in touch? Follow us on Twitter at Road to Autonomy or email podcast@brulteco.com. The Road to Autonomy is produced by Brulte & Company. The views and opinions expressed on the Road to Autonomy podcast do not necessarily reflect the views and opinions of Brulte & Company. The content discussed in this podcast is for informational purposes only and should not be taken as legal, tax, investment, or business advice.